Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical analysis show where we look at what happened in the market during the day and how we can plan for a better trade tomorrow. If you're not subscribed, please subscribe and share to your friends and colleagues and relatives so that everyone can benefit. Thank you so much. So the market is probably recovering from the short correction that happened the previous week. That's what it indicates. Let's see how do you reach that conclusion. So as usual, we will be looking at the pre-market analysis for the 27th of October, Wednesday, tomorrow, 2021, and we will be using all these different parameters that you see on the left side in the charts, and in addition to that, we will also look at data from the open interest point of view. We'll look at the volatility, we will look at the institutional participation, sectorial performance, global commodities, and then wrap up with some actionables. So let's begin with the charts, right? Price action, what is it? 143 points went up today. Nifty closed with a green candle after a long time, 5, 6 days, 7 days, and that close was above the previous hammer. Look at this. Today's close is above the previous day's hammer bounce that came, and BANKNIFTY formed an inside candle which more looks like a spinning top once again, but it's green close, but it was flat close after a ferocious move that happened, 1500 up move that happened yesterday. Look at this. This was the ferocious move that happened, 1500 candles this up move. So this obviously is an inside candle, but closed above the previous day's close. So it's bullish again. And so intraday price action, if you see 15 minutes time frame, you can see that the Nifty was very choppy and volatile. Look at this. It's shot up, gapped up, and then moved, and then came down, right? So this is some 120 points, 130 points, 170 points, then 200 points. So it's like the inverted V, a W, and an inverted B. That's the price action. It's clear choppiness, up, down, up, down. So BANKNIFTY also similar to there was choppiness, but the range was the 500 point range. Right? This also seems to have formed a W pattern, which is a couple of V's. Right? So choppiness is all around. That's the price action. So BANKNIFTY, so Nifty choppiness, for example, is 143 points it shot up, then 170 points it shot down, moved down, and then again 210 points up. So this is the kind of intraday play that's happening. So finally, BANKNIFTY closed near to 1% of 1.80%. So not BANKNIFTY, 0.80% up move happened in Nifty. So this probably is indicating that the short-term direction is end, because the bounce is more or less confirmed. You can see that, right? This is a change in priority. Previous resistance, acting as a support, and then there is a moving average also here. From exactly on the moving average, it bounced back. And then today was a confirmation green candle which closed above the previous day's candle, and Nifty is super bullish at the same time. So yeah, there are cluster of supports down there still. Nifty, what we have seen yesterday, 18K and downwards, we have very good support levels. So you'll see that Nifty, it's in the uncharted area, but so there is a Bollinger Band walking that's happening with the BANKNIFTY. While Nifty has fallen off from the Bollinger Bands, and it just takes the support of the Bollinger Band median and then bounced up, right? So yeah, so Nifty seems to be joining the BANKNIFTY in terms of the bullishness. We'll see how. So support resistances, if you see, you can see that, right? It's very clear. Downside, the first support will be 17,958, 1,002 pounds. Below that you have 17,815. Below that you have 17,650, 600. That kind of supports. Now upside resistance immediately would be at trading 350 to 450, that range, where it was a previous resistance zone. And above that you have the 18,650, and above that 18,950. These are all 50% and 38% of Fibonacci extensions. And the downside for support is also a Fibonacci extension level of 23. And the 17,650 level is Fibonacci retracement 23%. level. So those are the supports. On the Nifty and the Bank Nifty, you can see that it's an uncharted territory, and the first resistance to be taken out is 42,000 above the area, 43,000. Below the immediate support will be 42,900, then 40,000, 40,200, that's all, and then below that you have 39,500 levels, and then if that's broken, you have 38,800 levels, which are all Fibonacci extension levels of 23, 38, 50, 60. So all the support and resistance for the Bank Nifty on the right side that you see. So let's now look at the momentum and the divergences. We have seen that weekly there is a momentum bearish divergence which is in play, but today the bounce may be indicating that it is not going to meet the full target of 17,500 retracement, but yeah, it may be negative if this is further moving up. But weekly basis, there was a divergence that was in action the last several days. Now, otherwise, momentum is intact, bullish for both the indices, Nifty and Nifty. There is absolutely no problems here, right? Divergence weekly only there, daily no divergence there for the indices. Trend indication. So look at this trend bend that we have been talking about. So see what happened. The moment the trend indicates radial strength is taking a bend, it has been falling consistently. Now this needs to turn up, it need to take a bend up before we can say the trend is going up. Still now it does not happen, it's still going down, but the DMI positive is still maintaining that positiveness. That means trend is still bullish in Nifty. Bank Nifty, no doubt, although it has taken a DMI positive, has taken a bend, it is still in the bull zones, and look at this ADX trend, it is heading up above 45 levels, and so that is super bullishness that you see, right? So that kind of up move in the trend strength is not seen Nifty, but that can come in when there is a bend that's seen here, right? Otherwise trend is fine, both indices. Now the next one is volatility, and volatility we talked about, it's forming a range between 15 and or 16 and 90, 20. That may be the range that it's trying to so multiple times it cools off and then shots up and cools off. So that range formation is what is happening today. It dipped 5%, probably to make another up move, or probably to make another mean reversion, another down move to mean revert after a while. Never know that. But yes, it is forming a range. Premiums are high, IVP has increased, and yeah. But we did a dip today, but we did. So that is the thing. But the key thing is the range is getting, it is hovering in a range. It's trying to form a range. So volatility at this level is making the market very choppy. Intraday, right? We have already seen that. Operators data. If you look at left is Nifty and right is Bank Nifty. Highest call trading is seen in the Nifty at 18,000, and then we have 70,500 also having. So the expiry, the monthly expiry, would it see the 18,000 retained, or then so the fight is for the 18,000 as of now. So people think that 18,000 may be a good support, not 18,500. So 18,500 is where the highest call rating. That means the call riders would not let the market to move above 18,500, and after that you have 90,000 next highest call rating. So so the question is whether it is going to hit the 18,500 as it is moving towards that, or would it fail that and then move back to 18,000 else. But today if you see, it's a long build up, and it's put call ratio is much better than yesterday, 0.8. Bank Nifty, you can see that 41,000 is where the highest points. Super bullish. 40,000 is has good trading. The resistance seen at 42,000 and 43,000, exactly what we have seen earlier. So whether the 41,000 would be retained for this expiry is something that we'll have to see, or will it break out of the 42,000? Probably it will retain the 40,000 and 18,000 for this expiry, October expiry. It's what it may, there is a high probability because of the reason that it is, the upward journey is not going to be fast after the big fall. It takes time. So it may not happen in a couple of days. That's only reason, but reasoning behind that. So that's the option interest data. And tomorrow is Wednesday. Wednesday is very volatile. One day prior to the monthly expiry, had to be careful. Choppiness will be there. Big gamma moves can come. Decays would happen abnormal. So many things can happen tomorrow. It's monthly expiry. You have to be cautious and careful. Sectoral performance. If you see IT formed a gravestone doji pattern. It's an indecisive doji. A candle, but it moved up 5.5% today. The momentum is still sideways. We'll have to stay away from it. Metal closed green 2.5%, but momentum is still down and sideways, so we'll have to stay away. Auto is only sector probably that is bullish. That has got the momentum also now in the bull zones. It moved up 2% today and regained the momentum also from the sideways. So probably a good pick, but you have to be cautious because the momentum is on the edge. Pharma, stay away. Momentum short term. Today it is a hammer. It's a bounce up from a support zone. So it's not ready to further fall. It's bouncing in and slowly moving, but we'll just have to wait till the momentum catches it. FMCG also closed green with 1% up more, but momentum is sideways in the short term, so need to catch it. Reality shot back with 3.5% of up move, but momentum still need to catch it further from the sideways to the bullish zone. So we'll have to wait, but otherwise it's bullish with a cup and handle breakout that's happening and on the weekly basis. So as of now, you see auto is only sector that can be clearly termed as bullish from the momentum in short-term perspective. Others are out catching up is what we can say. Gotta wait. Institutional participation data has not come. This data that you see is that of Extraday. You can see that heavy selling has happened from the last 3 days by the Fyers. Whether it would, but to compensate for that, there are some buying that's happening on the domestic institutional side. Whether that's the same case that happened today or not, we would have to wait and see. Most likely, somebody might have sold because of which the big V-shaped moves happened. So probably maybe FI themselves which sold again another 6 or 7 day of selling. So we'll have to wait and see whether we'll just quickly check if the data has come in or not. But last time I checked, it had not. So we'll continue. Just not. We'll have to check that. Yeah. So that's a piece of worry. So the market was moved up today, so probably somebody might have sold, but whether it's DA or FI, we don't know. Some buying has happened because the market moved 150 points up. 140 points up means big buying happened in the last minute. Who did that? Which institution did that? We don't know. We'll have to wait. Yeah. So coming to the dollar and the currency pair and the global markets and all that, you can see that the right side here, the dollar index is like it's not ready to move further up. So it's consolidating at the previous resistance zone, which is acting as support now. And currency pair, if you see, it's slightly bearish day today. It slipped out from the resistance after an attempt to further move. It slipped out and seems to be falling back to the channel top. So yeah, it's not ready to move beyond the 75.25 kind of levels for this expiry probably. Crude oil has shot up. It's continued to move upwards to this 83, 84 kind of levels today. Also, it's a green that is seen there, and it's a multi-year up movement. Dollar and crude together makes life difficult for the Indian economy. Global gold charts is what is seen in the daily here. So you can see that it has attempted to break out the day from the channel top and then seems to have made this a new support zone. Seems to have climbed on top of that, and then but today it was a small dip, but it seems to be the end of the channel, and whether it would take out these immediate resistance on the top is something that we have to see. But gold is bullish overall. It's a cup and handle on a weekly basis that's happening. Dow Jones and global markets and Nasdaq and S&P 500 UK all see some kind of green as of now. Right, we'll have to check this next day to get the cues on how they perform. If there is a big down move or a big up move, that will reflect in our markets also, along with the SGX. The actionables Banks are performing. Yesterday also we had the Axis Bank and Kodak Bank, I believe. Axis Bank is having an inverted head and shoulder pattern. This is the cup of the, or the shoulder of the head and shoulder. It is broken out of a major resistance zone and it has got good volumes, great momentum, super trend, and it seems to be a breakout that may sustain. But you'll have to be patient to take it as a swing or a positional trade. There could be retracement that come, which will give you an opportunity. Stop loss definitely for positional trade has to be below the cup, below the pattern breakout zone, right? Yeah. So if this does not succeed, then it falls back into this zone, and then that's the end of the trade. Kodak Bank also seems to be having a good resistance that is taken out, and then good momentum, great volume. Look at the volumes here, and the second resistance that is taken out the last several weeks or months, so to say. Right, and the breakout today also is forming a very bullish. One of the stocks along with ICICI Bank, which kept the index super bullish yesterday and today. So there are the two actionables in the Bank Nifty. Just wait for retracement levels or wait for the move above the previous candle's high, whichever way it has proportional trades. Try to give enough gap for retracements, but not beyond the neckline. So the wrap up is the mild bullishness in the short term view, same as yesterday. Why it is bullish is because this seems to be confirming a bounce, hammer bounce that happened when today closed above the hammer's high. So that's it's a bounce on the moving average support, and it could sustain there. It seems it is also a change in priority bounce that happens. So Bank Nifty is still very bullish, and it probably may be indicating that a 3% correction was fair enough, and then it would further move before it makes the next small correction probably. Yeah, so that's the indication that that's why I'm bullish mildly. Why mildly? Because yeah, we'll come to that. But yeah, and also quarterly earnings could further cheer up market again. If you know, this entire month is having many more, and then if some of them are performing, it can short up, right? As long as nothing is bad, it could definitely move more. But major ones are over as now. HDFC Bank and Reliance, and but ITC is pending it maybe impacting. So why institutional mildness is because institutions selling is heavy, so you have to be cautious. Profit booking at the all-time high levels of 18,000 plus is always possible. So no sudden dips, volatility, choppings, all this can happen. So mild. Markets has room for more corrections definitely, because it is a vertical move that has happened from last so many months. So always you have to be cautious whenever you're bullish on at these high levels, all-time high levels, right? So the last two paragraphs is repetition like about the volatility. This is for the option trading strategy. So it's, as I said earlier, it's forming a range between 15 and 20. Today it has cooled off. Probably it may be cooling off further as the market moves up, and then main reward and then more upwards. So at this range you are getting reasonable good premiums, but the choppiness is a threat to intraday trading. So Vega spikes at these volatility levels can be benefited by using calendar spreads. Using vertical spreads always helps you to take away the risk due to sudden V-shaped moves and profit bookings and all that. And flying strategies also can work with range levels, right? So these are some actions on the Nifty index primarily, right? So on the stock action ones you've already seen. So I hope this gives you a reasonable good picture on what happened and in the market, and how we can plan for a good trade plan for tomorrow. If that helps you, share it with your friends and subscribe and hit like button. And yeah, that's all. Thanks a lot. Happy trading, happy learning. Bye.